What we've seen since January is the shipping freight rates have started to decline. Drewry produces an index of freight rates, a composite index, and we track the freight rates on a monthly basis, on a weekly basis. We've seen the freight rates falling down. We've very recently done an assessment of the container sector where we look at the supply and the demand to look at where the supply-demand situation is heading, which guides us into what we believe would be the outlook for freights. This year, we think that the freight rates could fall anywhere between 15 to 20%. The demand growth is very challenging. Demand continues to be volatile and decline. On the other hand, we see there is a great appetite for additional capacity, and we see capacity increasing in the container segment, but in all the shipping segments as well, which is resulting in a declining utilization of the fleet. I think the biggest challenge is the uncertainty and volatility with the markets. There are the short-term impact, and there is the long-term impact as well. We see consumer confidence declining very quickly, which is having a consequential impact on demand. We are seeing there is a lot of inventory building happening, which is counterintuitive to the falling consumer sentiment. So making a fair assessment of where this market is heading with regards to demand is extremely challenging. On the other hand, the capacity coming onto the market is also extremely challenging. There are a lot of choke points and bottlenecks that came up in 2024. What happens with those bottlenecks is also a difficult situation to get a handle on. We have taken the assumptions that these bottlenecks will continue, which will continue to absorb capacity. We currently estimate roughly about 10% of capacity is being absorbed with these choke points. And we think that if these were to be reversed, there would be a significant influx of additional capacity or latent capacity into the market. So I think any sort of meaningful assessment about the outlook for demand in the short term, given the uncertainty, is the most challenging part. I think there are lots of opportunities with the current environment. There is some relocation of capacity happening. We've seen exports increase in some countries. For example, the exports from India to US East Coast have increased quite significantly. So I think there is that opportunity. The challenge with the Latin America is it exports a lot of commodities and raw materials. So there's an opportunity to assess adding value to these commodities within Latin America itself, participate in the value-added chains to be able to export to other markets globally. Of course, ports will play a crucial part. I was in the port of Cartagena the other day. They showed us fantastic plans that they have to add efficiency, productivity, and supporting the customers in a big way. So it was a fantastic site visit. I think there is a lesson to be learned from there, or for all ports in Latin America. There is a huge opportunity for ports to think about adding productivity, efficiency, value-added services within the ports. I think the Gemini cooperation is a very different concept that Gemini has brought to the market. Clearly, they're focusing on speed. They've reduced the number of port calls. They are looking at high volume movements in ports. So again, port productivity, efficiency becomes very important in the ports that they select. The question is whether Gemini would be able to charge a premium for a fast product to the market, the efficiency, the productivity, and the reliability. If they are able to do so, then we believe that the other shipping lines will also follow this particular trend. But for now, we think that the current situation of the alliances will continue, of the 4 alliances that we have. The ports of the future will need to work very hard. The land available for ports to expand is simply not there. Ports will therefore need to become much more efficient, much more dense. They will need to be much more smarter to be able to handle both the volatility in the volumes and be able to handle the growth in volumes going forward as well. I think we need to learn from what has happened historically. The congestions have become a big issue for the supply chains. I think 2025 is going to be a very challenging year for the industry. There is a great level of uncertainty. We believe in current circumstances the trade will still continue to grow. There is a huge level of downside risk to the trade and very little upside potential. But we will see what happens in the next couple of years, in the next couple of months, on how trade pans out and how these tariff discussions pan out.